You let me know when you're ready, and I'll bring you back on. Good. All right, let's hear it. Sounds. Boom.
Does it sound better?
Sounds great. There you go.
Perfect.
I'm not going to lie. For a second there, it was a little chipmunky. I was like, I can't have Shana on like that. So we fixed it. We got you back on.
All right.
We're
perfect.
good. Let's
perfect.
get towards it. Hey, sometimes we shake off the rust. That's how we do it, just like in trading action. So let's get towards the action. It looks like, of course, Jerome just shook up the market. We're getting a little bit of a spike. But let's stay in kind of the longer term sense. Let's start focusing. Where do you see the best opportunities right now in this market?
Well, I think his comments are actually relevant to where I see the best opportunities.
Yeah, so let's bring it up.
So I think his comments are just continuing to suggest that they are going to remain quite aggressive with their tightening. He made several comments saying that while he's seen some softness in the economy as a result of the increases in rates, what they haven't seen is any real movement in inflation, which is his main priority, which suggests that it is going to continue to be aggressive for longer. As a matter of fact, he said exactly that. He said, we expect a period of much slower growth for an extended period of time. So I'm positioning for that type of environment. I like staples, industrials, healthcare names that will do okay in a slow growth environment. So I sent a couple of names over that kind of are some of my favorites right now. One we've talked about before, Leidos. That stock has done incredibly well. Government contractor. Fun fact about Leidos, they have 100% market share in airport TSA. I'm sure we've all seen that additional machine you go through if you get tagged for additional screening. That is a Leidos owned technology, and they have 100% market share in that space. They have a tremendous growth in their technology offerings, whether it be cybersecurity or things like airport security. But they also have a rapidly growing health and human performance division that's both civil and military. That has been their key growth engine, which should continue to do well even in a softening economic environment. The stock has done great, so I almost hate continuing to say it's one of my favorites because since I started talking about it, it's up 27%. But it is still trading at a reasonable multiple with an attractive dividend yield and still has great fundamentals. So that's one name I really like. The other two are kind of questionable. I've sized my positions accordingly because they have some risk associated with them, but they fall into these buckets. So Humana is another one. They're obviously, you've probably seen the millions of commercials they do about their Medicare supplement programs, but that is actually one of the key fundamental positives for Humana is the growth of these Medicare and Medicaid programs that they have and our aging population. Healthcare spending doesn't go down because the economy is slowing. In fact, programs like the ones that Humana offers becomes more important to make healthcare affordable, especially with those who need it most. So Humana is another one. I say it's a little expensive. It's trading at a slight premium to the market, but it has a very attractive dividend yield. The one caveat that gives me pause is recently they've had some insider selling, which is typically not a good technical sign, but fundamentally, like I said, I think the company has some attractive fundamentals. So that's a name I really like. And then the third one is Americans Home for Rent. Lots and lots of discussion about single family home rentals. They are a leader in that space. They don't just build houses. They build single family home like almost apartment communities with swimming pools and gyms and exactly what young families are looking for. Single family homes. They're a leader in the space. They're in the most attractive markets, Texas, Atlanta, and the North Carolina are a substantial part of their market share. So people are very attracted to what they're offering. They want that single family home experience. Millennials are having families, but buying a house is just not possible right now with interest rates where they are and home prices and lack of inventory. So this is a logical solution. And I think more and more we'll start to see this. And again, they're kind of a first mover and a leader in that space.
Yeah, definitely. It seems like sometimes it's right now, especially, it's more focused into the fundamentals and the non-sexy plays, right? It seems like the value plays that seem to make sense. The other day I was watching IBM move. I was like, I can't remember the last time I thought about IBM, but let's take a look into how your outlook has changed. What has changed recently? Is there anything that you've been looking into that you weren't thinking, let's say 3 months ago?
I actually don't think much has changed, honestly. I've kind of kept this course of having, we've talked about this, liquid alternatives as diversifiers. I continue to believe that they belong in portfolios at least for the next 12 to 18 months, because I do think we're going to have some difficult economic times, and these are products that are going to help with risk management and downside protection. So these are not going to be new tickers to you: BTAL, FMF, MRSK, IVOL. These are all names that I think are attractive risk management tools for portfolios, and I continue to use them in a substantial allocation in my client portfolios, because I think these are the things you need to have in your portfolio as we kind of move to the into recession, and it's looking more and more like that's where we're at. I will say MRSK is a newer name that I've started using in my alts portfolio because it is a little more sensitive to equities, but I think we're closer to a bottom. And so I want something that's going to continue to provide downside protection, but also participate in upside if and when equities do turn. And we have to keep in mind that equity markets are a leading indicator, and they do tend to turn 6 months before a recession ends. So, if we just look at March 2009, that's when the market bottoms, but the actual recession didn't end so well into the summer. So these are things we have to consider. And so I am positioning a little more with a hedge, but maybe a little more upside potential with some equity exposure.
Yeah, I think you mentioned a lot of great opportunities in having the uncorrelated hedge, right? And having that aspect into the portfolios, where I see a lot of people feel that their portfolios are balanced, but really when it comes to a time like this, they wake up and they're like, well, was it really balanced, right?
Right. Fixed income's down double digits. Equities are down double digits. Now, I would argue that fixed income is now starting to look very attractive. We know rates are going to continue to go up. And now even if you lose a little bit of the principal, you're being rewarded with pretty substantial yields on your investment grade and your government, where you're getting 7-8%. I mean, I don't know if many of us remember when there was a time where you could get a 6% CD, but they exist now. And so these are things that actually are starting to look more attractive. But as Powell said, they intend to continue to remain aggressive. And as long as they keep raising rates, that means the actual par value of fixed income will go down. So you want to make sure you're getting enough interest rate reward for the fact that you are still going to have some downside on your principal. But it's starting to get to the point where fixed income is looking more and more attractive, if just from the income perspective, because you don't need to take on substantial credit risk in order to get attractive yield.
Yeah, definitely in a time where there's some alternatives, right? I mean, and for the queen of alternatives, thank you for bringing that up, right? Let's get towards the holiday season. How did you see it? And do you feel that the consumer is starting to weaken?
I think the consumer is weakening. I think these initial numbers out of Cyber Monday and Black Friday aren't going to show it, because I do think consumers went out and spent. But I don't know about you, but my inbox was flooded with every company I've ever bought anything from in the last 10 years offering ridiculous sales that went well beyond Cyber Monday. I'm still getting emails about, slashing prices. That says to me, they're trying to entice consumers with just rock bottom prices, which isn't actually good for margins. It might get a lot of people out there spending, but what is the average dollar amount they're spending? I think that is going to be lower than it has been in the past. They might be out there. The customer count may be up. More people may be spending, but they're not spending as much. I think the holiday season is one I think we should watch. We've seen rising credit card balances. So people are using credit more than cash and savings for their spending. As that continues, I think they're being more cautious about what they spend this year for the holidays. And they're certainly taking advantage of these tremendous deals, but that does not mean that they're spending more.
Definitely. I mean, at the end of the day, there's only so much the consumers can take. There's one thing, 1 year of inflation, but it seems like now we've had a year and a half and looking to continue being at high inflation next year by all means. So it's going to be tough on the consumer.
I think people are also worried because we're seeing more and more layoffs, and it's starting to move out of tech.
Yeah,
and so that is something where people are starting to become more aware about job security and things of that nature as well, which also affects the way that they spend their money.
Yeah, you start seeing it and you hear it from workers all around now. They're really starting to look left and right. They're starting to see the layoffs happening around them, and a lot of job security is starting to become in question. Now, we've gotten a lot of mixed signals from China. And it seems like, some can make it as noise, some can make it as news. What do you see here? Do you see an opportunity in China stocks, or is this a risk that you would likely avoid?
Right now, I'm likely avoiding it for a couple of reasons. Number one, they haven't given up their zero COVID policy, which means they'll continue to disrupt the supply chain in a meaningful way. Second of all, yes, we're seeing the rise in protests. Civil unrest is not necessarily economically a good thing. It might be after we get through it, if there's a change in regime, that could necessarily be positive. We have no idea how these are going to go. In the past, the communist government there has been able to get these things under control very quickly, and it's made no difference. Maybe this time is different. Quite likely, the willingness of people to actually challenge the government seems much greater this time because of what they almost feel like, what else can you do to me? You already locked me in my house and I couldn't leave. What's worse than that? Killing pets, taking kids away. I mean, I think they see it as there's really no downside. So more people are willing to participate in these types of protests. But the question is, will it result in any change? And I'm not convinced that it will just yet. It's way too early to make that. So I'm not looking at China right now as a potential opportunity. I think we kind of need to see how far this goes. And if the unrest seems to be moving in a way that suggests it'll overthrow the government and potentially install something that's more open markets, then maybe I'll take a second look.
Now, the last question I'll leave off with is a cryptocurrency question, right? It seems like there's a lot of talk out there. Of course, some people feeling a little bit, and I would say a little bit hurt from the FTX situations and all this situation that has really ruined and left a sour taste in a lot of investors, outlook into cryptocurrency overall. What is your outlook going forward in cryptocurrency?
So it's interesting. I've always been a fan of the blockchain, and cryptocurrency is kind of a necessary part of the blockchain. But I focus more on the blockchain. And, it's funny, you mentioned IBM. I'm fairly certain it was the IBM CEO that was on CNBC a couple of weeks ago talking about blockchain, and where he felt and they wanted to make investment was blockchain for supply chain logistics. I think it's become a greater focus now with the supply chain disruption that's coming from Asia and China. So I think that I want to start looking at the underlying blockchain technology and how adoptable it is and what is most likely to be adopted for those kind of scenarios, which clearly seems to be where big tech is looking to invest its money. So I'm going to look at things whose blockchains are conducive to smart contracts. Things like Solana, Ethereum, Cardano are the three that kind of come to mind. They all have, pros and cons. And I know there's some newer blockchain technology and newer crypto coins that are coming out that are also playing in that space. I'm choosing ones that people are more aware of. But my point is, now's the time to not get caught up in the hype of what's the newest and greatest coin that everybody wants to jump on, and focus more on, whose blockchain is actually applicable to the use cases that people want to invest in. And anything that can work in smart contracts that can help with supply chain logistics, I think that's going to be the winners out of this. But I think we're in for a crypto winter, kind of like we saw with tech, where a lot of things do a lot of nothing for, an extended period of time. But in the end, I think you will have winners, and the winners will be the ones that are in the spaces I just spoke of.
I think it's an important outlook too. I think that a lot of people get lost in that it's the platforms that themselves went down, and it wasn't
Right.
the cryptocurrency blockchain that brought them to it. And it's just, it's tough. It's tough, especially when you're dealing with kind of a new outlook in an area where a lot of people, I feel, just don't do enough research to understand what investment they're truly being a part of. Appreciate you, like always, coming on, speaking on different areas. We talked about stocks. We talked about the Fed. We talked about retail. We even talked about China, all in one interview. So thank you for joining me today. Shana, Sissel, we'll definitely have you back on.
My pleasure. Have a great day.
You guys keep following the Queen of Alternatives, and I'll definitely make sure that her Twitter is in the description below so that you guys can go ahead and give her a